Jennifer, I'll start with you. People have been talking about the rush of institutional money into crypto for a long time, and it doesn't seem to be happening. What's missing?
Well, I think there just hasn't been the tools that institutional clients are looking for. And so we see hedge funds, RIAs, endowments, high net worth individuals all on our platform, and we're incredibly excited to support them.
Well, a big part of, though, I think the reason why you're seeing some reticence, and I talk to a lot of people about this who are legitimate investors who really are attracted to the idea of cryptocurrency, the idea of the blockchain, but they still feel like there's not enough protections and there's not just sort of enough institutional structure that would allow them the safety to play in it.
I think that's a good point. What we aim to bring is something that's an end-to-end solution. I think one of the challenges for institutions has been you have to assemble all of the pieces yourself if you want to do trade execution and you want to do custody and you want to think about all of the things, having exchange relationships. So part of what we think is missing is that end-to-end solution where a client can go to one place and have one relationship and navigate the entire landscape with one counterparty. And we think bringing that together in the same way that you would have that same sort of relationship in a prime brokerage relationship in the traditional securities world is part of what's missing to answer that question.
How many do there need to be? Because this is a competitive space. And we've got lots of people building exchanges, building custodians, but the infrastructure is being built and by many big players out there.
Right, so we see a number of competitors, but all of them are software only. So the biggest difference with Tagomi is that we have the prime brokerage model, so you only need an account with us, right? And then you can trade at all the different liquidity sources around the world globally. And so that makes a big difference for folks.
We know that there are so many cases of people holding their crypto with some third party and it disappearing, whether it's a hack, whether it's the founder of the brokerage died. How do people feel comfortable that their crypto is safe in your hands?
So we actually partner with a number of custodians that we consider to be best in class. And from our position, we can choose those. Each of them has a unique strength and a unique set of capabilities. And so part of our job is to advise clients that here's how we see the landscape, we understand it at great depth, and we can choose different custodians for their different capabilities.
Jennifer, when you're pitching to investors in your company, are you hearing from them any concerns about the type of people who are using crypto? Because there's still a perception that the users of most cryptocurrencies may not necessarily be the most upstanding people.
Right, so our investors have been in the space for a very long time. So for example, Paradigm, it was founded by the co-founder of Coinbase and also a partner at Sequoia, and they're backed by Yale. And so these funds have a very long-term view on the space. Another fund, Pantera, was one of the first funds in the space as well, in Bitcoin. And so they take a very long-term view. They're very used to folks having this perception, but we're excited to bring more price transparency and things that folks have been worried about. And so we're bringing that solution to the space now.
It seems like the custody component is obviously a huge stumbling block. And just this question of like, okay, you go out and buy some Bitcoin or whatever, but you don't want to like tell the partners in your fund like, oh, I lost the keys and it's all gone. Beyond that, what would you say is like the next big thing? Is there a regulatory aspect that still needs to help people be comfortable? What is the sort of next major concern?
So the next major concern, I think, is market structure. So the market structure in cryptocurrencies has largely been built for the retail investor. If you wanted to put to work hundreds of thousands of dollars and millions of dollars, navigating a complex market structure is a challenge. And as an institutional user, you would have to open an account at a number of different places and choose where the best price was at any given time. You also have the option of going to the over-the-counter market. All of those choices for the end user, we simplify into one choice, which is using technology, find the best price at the best time, and using algorithms and the sorts of things that you would find in equities markets.
Jennifer, I mean, how difficult is it as an institutional player right now to go about executing a trade? I mean, I'm amazed that basically all the interactions are done via Skype, I understand, pretty much. Like, this almost feels like the very beginning of the FX market when everyone was using Yahoo, and the infrastructure is still building up.
Exactly.
Talk us through how much a big trade, how long that would even take.
Right, so it's been very hard in the past, right? You'd have to stitch together a bunch of different things, find someone on Skype, and so as an institution, that's just not what you would expect, right? So part of our goal at Tagomi is to bring those institutional additional services and advanced technology that you would expect in any
How
other
quickly?
securities. Oh, you could do a very large trade with us very quickly right now.
So it's sort of already there, you're saying?
Right, so we have the solution now. We have hedge funds, very traditional players executing large trades on our platform right now.